So Zoom is down 50% from its all-time highs last year in October. But does this represent a good buying opportunity, or should you completely avoid this stock? But with the world reopening and people going back to the old ways of doing business by shaking hands with a stranger in a back alley somewhere, does that mean it's the end of the road for Zoom as a company, and this stock will continue falling to the downside? In this video, I'm going to be giving you some of the pros and cons when it comes to looking at buying or even selling Zoom stock. We're also going to discuss some fundamentals, but first, remember this is not financial advice. You should do your own due diligence when it comes to making any investment decision. Now, if you are new here and you do like a man with a beard, do consider subscribing and turning on the bell, and I'll make a bet with you right now. I bet you can't turn that like button blue using only your left elbow. If you want to support the channel, there's a Patreon link down in the description where you can get some exclusive perks, including our unique WhatsApp group. And if you sign up on eToro on the pinned comment, sign up, deposit, make a trade, and you get free lifetime access to the LWT investing chat room. Now back to Zoom, looking on the chart alone, it's pretty clear that it's oversold short term. I mean, just looking at the chart alone, surely Zoom is a big company and this is a very good discount buy. Now at the recording of this video, Zoom is valued at around about 87 billion US dollars, so definitely not a small company. And if we go on simply Wall Street's algorithm, and to be clear, we don't just use this indicator alone, but simply Wall Street's algorithm says that it is currently 30% undervalued. The picture's not all rosy though, because their PE, their price to earnings ratio, and again, if you don't know what that is, there's a video on my channel somewhere on it. The price to earnings ratio is really high, coming in at 128. And it's not clean either with the PEG ratio, their price to earnings growth ratio, which is the price to earnings including their current growth rate. Their price to earnings ratio is also quite high at 9.24. Now, if you don't know what they are, in layman's terms, the closer to one, in theory, the better value a company is. But Zoom's assets and liabilities are in quite a good stead. Short term, they currently have 4.8 billion in assets with a 1.26 billion in liabilities. And if we go into the long-term assets and liabilities, it's a lot smaller, but they have 505 million in assets with 117 in liabilities. So covered there, and again, the company's in quite good financial health. Now, like I said, the stock did recently IPO a couple of years ago in 2019 in April, and from there it sort of set steady away. Then of course the Rona hit and the stock just literally exploded to the upside. People were stuck at home. They needed something that's better than Skype because, well, let's face it, Skype sucks. So people were flocking to Zoom, their revenue increased, and I think their customer base actually went up like hundreds and hundreds of percent pretty much overnight. But like I said, it rallied through the Rona situation, going up over 700% to its all-time highs from its IPO day, reaching an all-time high of 590. Since then, it's sold off about 50% and currently, at the recording of this video, riding around the 300 mark. So given all this information, this company looks like, on paper, it's at a bit of a discount. It's in good financial health, it looks like it's going to do well long term, and well, I think people are going to continue paying for Zoom. That said, I think that there's a decent bear case here, and let's cover the bear case before we look at the bull case, and then I will leave you with my final opinion. Now, moving on to the bear case, there's a few things we really need to consider when it comes to this company growing and growing and growing. First thing is, has the growth already happened? I mean, realistically, Zoom is probably one of the most known platforms out there for what they do right now, absolutely destroying Skype, and their only real competitor, in my eyes, is Microsoft Teams. And on a cheeky personal note, I actually prefer Zoom to Microsoft Teams. But given the fact these customers are now already with Zoom, is there any customers still out there that they can still get? Or will the company just stay stagnant and continue getting the revenue? We've seen recently with companies like Netflix, they also had the boom, and now people are either cancelling subscriptions or it's sort of reaching a stagnant growth point. Now, I know Netflix is still getting customers year on year, but my point is that growth is slowly slowing down, and that could be a real indicator that it could happen to Zoom as well. Now, obviously, they did an offering recently, which probably is not really good when the stock is on a downwards trend, and I think that given the fact that this company is down 50%, we need to see some sideways action for a while because it's bag holders anonymous above the current price. These people need to be rotated in and out. There's a lot of new traders who are in this stock, I know that for sure, just looking at Twitter, Reddit, and all the other crazy places people get stock tips from. But there is a lot of bag holders in this stock, and I think they need time to be rotated out. Another bear case is the overall market and the tech sector in general. These sectors have started to see really bad dips when after they release earnings or in general terms, the whole market falls. The tech sector as a whole, I've been saying it for a while on the channel, I do think is very overvalued short term. If you're buying Apple and holding it for 10 years, of course you're going to make money. But if you're buying it here, you could be sat through 20-30% of pain if that crash continues. And I think the tech sector is one of the sectors that would be hit the hardest in a sort of market crash scenario. Now, unfortunately, Zoom is in that tech sector, and I think it could also see further dips if that does happen, even though it's done a 50% dip already. Now, the biggest thing in the bear case for me on Zoom is the lack of diversifying their portfolio. I mean, we all know what they do currently, but they're not doing anything else. I think they need to venture out and do new aspects. There is one thing they're sort of looking at, and I'll come onto that in just a second, but there isn't really, I mean, we look at Uber again. Uber taxis weren't working anymore, so they just pumped all their money into Uber Eats. People sat at home, and now Uber's absolutely destroying it on the food delivery game. And when the taxi business comes back, Uber should see a massive growth in revenue. But that said, it's not all sunshine and rainbows for Uber as well, and there's a video coming on that soon, so make sure you have subscribed. But given that Zoom has just done an offering, so they've got cash there, and that they've had massive revenues, they should be venturing into other businesses. Now, I know they want to perfect what they're doing currently, and I get that. But there doesn't seem to be any real projects in Zoom's pipeline either. What are they looking at doing in the next 5 years? And that really does concern me, because that means it could be quite a stagnant company. And that would be great if they offered a dividend, but they don't. So it does concern me a little. Now, what you're all here for if you're looking at buying Zoom, the bull case, and to be clear, there is a decent bull case for this company. Now, the first bull case really is it is oversold. On the chart alone, it looks like it's good value. And if you don't YOLO in with leverage and you slowly scale into big red days, you could get a decent average into any push. That said, on that strategy, for me personally, not financial advice, don't sue me, I would be scaling in and out certain parts of that position, because I do think red days could come in a tech sell-off. Now, another thing for the bull case, I think companies will keep their Zoom subscriptions even if they do go back to the office. I think Zoom's proven that it's a good concept, and that if a lockdown or some situation like this happens again, or even just meeting to meeting, it's just much better than Skype. So offices around the world talking to each other, I think Zoom will keep majority of those subscriptions even coming into the next few years if the world fully reopens again. And let's be honest, at this point, who knows if the world will ever fully reopen again. But I think a lot of companies and individuals will continue their Zoom subscriptions, which means they won't see a massive dip. Now, Netflix, on the other hand, when people do start spending their time outside more, they may consider cancelling their Netflix subscription. But considering Zoom is work-based focused, I think a lot of companies and individuals will probably keep their subscription. Now, a big bull case, which is complete speculation to be honest, is if they increase their prices. I think Zoom is really cheap for what they're offering. And I think that they do need to increase what they're charging companies. Mainly the bigger companies. They could get away with doubling that price, and companies will still pay it because they're on the hook already. If Zoom do that, their revenues will massively grow, and I think it makes perfect financial sense for Zoom to actually do this in the future. I think Microsoft actually had a rumor flying around a couple of months ago that they're going to increase the price for Teams, and I think Zoom really needs to do this if they want to push themselves to the next level, raise that capital rather than diluting their stock price via charging customers for their great product. And look at it on the other way. I mean, whatever a company is paying for Zoom from a corporate standpoint, most of it's a tax write-off anyway, if not all of it. So why aren't they increasing the prices? I don't get it. Now, it did say Zoom has something in the pipeline when it comes to new projects. They actually just had this Zoom apps thing come out. There's very little information on the internet about it, believe it or not. But Zoom has built a little fund, or well, quite a big fund of $100 million US, and they're going to be giving this fund out to smaller partnered companies to develop other apps where people can communicate with each other and invest in other smaller companies. So they're sort of doing that thing, and then that will come under the Zoom umbrella. But partnering with smaller companies also worries me a little bit as well, because why aren't they doing it themselves? They've clearly built this amazing app, and why are they paying other small companies to do this when they could hire people in-house to do it for them? That shows me one of two things. First thing is being that they don't have the right people in place, or they don't have enough time. Now, I think it's probably the latter rather than the first, of having less time available, which means they need to hire more people anyway. And I think if Zoom went that route, it'd be a much better company established, and they could have more potential in the future. That's just my personal thoughts. But the big one, am I buying Zoom stock? Well, first for me, I think they need to raise prices if they want to continue growing year on year. Now, if they want people like me to put my hard-earned cash into this company and this stock, then they need to grow outwards. They need to look at other projects and try and get that revenue diversified and keep growing year on year. They're growing really inwards, and I get it, they want to be the best at what they do, but there's no real exciting news of it, and no hype means no stock push, and again, they don't give a dividend, so why would you just sit and wait on a company that's got quite volatile action, let's be honest, but best case scenario is probably going to sit stagnant in terms of earnings. Now, I do think it is oversold, and I might pick up a small position soon, but I will be scaling into big dips. I think big dips could come. Any tech sell-off is going to see this company take a decent hit. We've seen it recently when Apple had its bit of dip after earnings. Amazon, Netflix, when all these tech companies take dips, Zoom will come down with them. So I'm not going to bet the farm, and I'm definitely going to scale in very slowly on this ticker. Now, all in all, if I had a gun to my head, am I bullish or bearish? If I had a gun to my head, I'd probably say I'm more bullish than bearish, because if I bought Zoom, I'd probably hold it for 10-15 years. I'd buy in on dips with the mentality of holding it for a very long time, probably more than a decade. Zoom really needs to diversify its portfolio or be acquired by another company if you're looking for a 100% return. I can't see it happening in the near future, so in the meantime, I'm going to take this time and opportunity to scale into Zoom with a decent entry point. Now, if I don't get that entry point, that's fine. I'll just YOLO with leverage on Dogecoin, and that is a complete joke, but hey, that cryptocurrency be absolutely nuts. Now, what I'd like to know from you is, what do you prefer, Zoom or Microsoft Teams? Let me know down in the comments. Do me the kind favor, please help me out. Make sure that like button is turned blue if you're watching this far. Make sure you subscribe and turn the bell, and I'll see you in the next one. Take care. Peace.